If you've been wondering where this market is headed next, you're going to want to hear what Tom Lee just said. In his latest CNBC appearance, Tom Lee, co-founder and head of research at Fundstrat Capital, made a bold statement. S&P Rerating has begun, and a breakout rally could start within days. In this video, I'm going to play you that clip from CNBC's Closing Bell, where Tom breaks down the market's current position, the shift in investor sentiment, and why he thinks we might be on the verge of another major move. Then, right after the clip, I'll give you my personal reaction and breakdown of exactly what he meant, and why it matters for your portfolio. And stick around until the end because I'll also share my in-depth analysis of what I believe is the best AI stock to buy right now. So, if you only watch one investing video today, make sure it's this one. And make sure you watch all the way through. Hit that like button. Let's see if we can get this one to 1,000 likes. Share it with anyone who's serious about making money in the markets, and drop your thoughts in the comments. And of course, subscribe so you never miss my next big market update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Alright, let's roll the clip and hear exactly what Tom Lee had to say.
What's up with this market? We tired? Have we run out of gas? What's the story?
I think the market's consolidating and maybe trying to get direction from what the market does, because we did gain 28% from the April lows. We got to digest that. Now we're in August, like the dog days of August, where liquidity is lower. And I think that we're still holding our breath because we're in a period where the Fed isn't going to make an interest rate decision until September. So some of the key macro is kind of on hold. So I think markets are wait and see, but I'd say that pullbacks have been shallow.
Is it fair to say there's a more sober view from investors about stocks? I mean, you've been suggesting that this is a hated V-shaped recovery, even as we continue to climb this wall of worry until most recently where we've sort of sputtered in place.
That's right. I mean, it's definitely the most hated. I can attest to it from our conversations with clients. We can see it measured in surveys like AAII, where there's stubborn bearishness net still. And then we did the rounds, Fundstrat did the rounds with a lot of our institutional clients the last 2 weeks. And I think folks are very cautious, which is actually good for stocks. They're cautious because, of course, markets have moved and our clients tend to be valuation sensitive. But I think adding to their frustration is that during that April downturn, many were selling their best names because they were trying to get defensive, and then they haven't fully reloaded yet. So I think that's why there's still room for stocks to go up.
So your clients are valuation sensitive, which makes me almost want to laugh, because is anybody valuation sensitive to what's been going on in the market? We're historically well above the averages on the prices that you're willing to pay for stocks.
Yes. I mean, what we usually tell our clients, but really at the core, any fundamental investor is going to use valuation as really one of their anchors, is that the stock market had 6 stress tests in the last 5 years, from COVID to the bullwhip supply chain, to the fastest inflation cycle in history, to the fastest Fed hikes in history, then to the Trump tariffs, and then, of course, U.S. bombing nuclear facilities of Iran. Those are things that could cause catastrophes for earnings, but instead the S&P earnings have actually grown. So I think we're in the process of re-rating the S&P. So I actually think multiples are continue drifting higher.
Okay, so let's talk about other so-called knocks on the market. Valuation, obviously, one of them. They say there's too much speculation. You look at some of these stocks, meme stocks, low-quality stocks, cult stocks, and other things that have gone up a ton. Now, you're the chairman of 𝗣𝗟𝗏, which is new, right? Your role there is new. And I'm sure there's a lot of great feeling about you and the role and what's taking place there. 𝗣𝗟𝗏's up 65% this week, okay? It's up 1,000% since you became chairman. Respectfully, I mean, come on. What's happening with these stocks? What's happening with some of this fervor that feels like it's in the market?
Well, I think the dearth of IPOs over the last 5 or 6 years has shrunk the number of stocks in the U.S. stock market. There's not even 5,000 listed stocks anymore. So these names that are IPOing are scarce, and that's why they go up. 𝗣𝗟𝗏 is really, in a simple way, you can value it on how much Ethereum it holds. When I joined as chairman, it had $4 of Ethereum. held per share. That number is well over $25 today. So the stock isn't even trading at a high multiple of its Ethereum holdings. And it's well north of 25, but we've disclosed 25 previously. So it's actually, in a way, less expensive now than it was a month ago.
Right out of the gate, Tom Lee sets the tone by saying the market isn't necessarily running out of steam, it's consolidating. Think of it like a runner who's been sprinting for a long stretch, now slowing down just enough to catch their breath. From the April lows, the market has surged 28%. That's huge in such a short time, but we're now in August, what he calls the dog days of August, a period notorious for lower trading volume and weaker liquidity. Investors aren't making big moves because the Fed's next interest rate decision won't come until September. So in Tom's eyes, the market right now is in wait-and-see mode. But here's the key detail. Pullbacks have been shallow. That's important. It means that even when stocks dip, they're not staying down for long. Buyers are stepping in quickly, which is often a sign that underlying demand is still strong. Now, Tom has been calling this rally a hated V-shaped recovery. And what does he mean by that? Well, it's not just market punditry. He's been in direct talks with Fundstrat's institutional clients, and even after this big rally, there's still a stubborn level of bearishness. Surveys back this up. People aren't euphoric, they're still cautious. And this kind of caution can actually be bullish because it means we're not at the point of irrational exuberance yet. Why so much caution? He explains that many professional investors made defensive moves back in April's downturn, selling off their best-performing stocks in an effort to protect themselves. The problem? Those same investors haven't fully bought back in. They're underexposed, and if the market keeps creeping up, they'll feel pressure to jump back in, potentially driving prices even higher. Now the interviewer challenges him on valuation. We all know the S&P 500's price-to-earnings multiples are running above historical averages. And here's where Tom makes an interesting point. Valuation still matters, but the context has changed. He reminds us that over the last 5 years, the stock market has endured 6 major stress tests that could have destroyed corporate earnings. Everything from COVID to supply chain shocks, the fastest inflation cycle in history, the fastest Fed rate hikes, Trump-era tariffs, and even geopolitical events like U.S. strikes on Iranian nuclear facilities. Yet despite all of that, S&P 500 earnings have grown. His takeaway? The market deserves a re-rating, meaning higher valuation multiples are justified. In his view, P/E ratios could still drift even higher from here. Then they pivot to one of the most common criticisms. There's too much speculation. We've all seen it. Meme stocks, low-quality names, cult favorites skyrocketing. The interviewer points out that Tom recently became chairman of 𝗣𝗟𝗓, a company whose stock is up over 65% just this week, and an eye-watering 1,000% since he took the role. And she basically says, respectfully, what's going on here? Tom's response is telling. He notes that the U.S. equity market has far fewer stocks than it used to, fewer than 5,000 listed companies compared to much higher counts in previous decades. A lack of new IPOs has made fresh listings scarce, so when a new compelling stock hits the market, demand can be overwhelming. As for 𝗣𝗟𝗓, he frames it as a simple valuation story. It can be valued on the Ethereum it holds. When he joined, the company held about $4 worth of Ethereum per share. Now that's over $25 per share, and the stock, he says, isn't even trading at a premium to those Ethereum holdings. In other words, he's arguing it's not wild speculation, it's just the market pricing in the company's assets. So, to sum it up, Tom Lee sees this market as taking a breather, not running out of steam. He thinks skepticism is actually fuel for more upside because so many investors are still underinvested. He's arguing that valuations, while high, make sense given the resilience of corporate earnings through multiple crises. And when it comes to the so-called speculative frenzy, he sees it partly as a structural outcome of having too few public companies for too much investor capital. If you read between the lines, he's telling us this. The wall of worry is still standing, and as long as that's the case, the rally might just keep climbing it. Let's dive in and reveal the best AI stock to buy and hold forever. In the world of artificial intelligence, there are a handful of companies shaping the future, and one of the most exciting stories is Advanced Micro Devices, ticker symbol AMD. Whether you're an investor, a tech enthusiast, or just curious about the next wave of innovation, understanding AMD's journey is essential. This company, once overshadowed by its larger rivals, has become a central player in the AI hardware revolution. For years, AMD was seen as the underdog, but that's changed. Today, they're not just competing, they're leading, especially in AI hardware. Their rise has been nothing short of remarkable, and it's a testament to their relentless innovation and strategic vision. The AI revolution runs on powerful chips, and GPUs are the brains behind it all. These chips are the engines that power everything from self-driving cars to advanced language models, and the demand for them is exploding. One company dominated this space for years, but AMD has quietly engineered chips that rival, and sometimes surpass, the competition. Their relentless focus on performance, efficiency, and scalability has paid off, earning them a seat at the table with the industry's biggest players. The market for AI chips is projected to hit hundreds of billions in the next few years. There's room for more than one winner, and AMD is seizing its moment. As AI adoption accelerates across industries, the need for high-performance hardware is only going to grow. Their MI series Instinct accelerators, especially the MI300X, are game-changers. These chips are designed from the ground up for the most demanding AI workloads, setting new standards for memory, speed, and efficiency. The MI300X is built for the massive demands of generative AI. Think ChatGPT and beyond. It's not just about raw power, it's about enabling the next generation of intelligent applications that will transform how we work, communicate, and create. Its memory and performance give it a real edge, letting it handle bigger, more complex models efficiently. This means faster training times, lower costs, and the ability to tackle problems that were previously out of reach. Big tech and cloud providers are desperate for more AI computing power, and AMD is delivering. Their chips are being adopted by some of the world's largest data centers, powering the infrastructure behind the apps and services we use every day. Every major tech company, Microsoft, Meta, Google, is in an arms race for AI dominance, spending billions on hardware. The scale of investment is staggering, and the competition is fierce. For years they had one supplier. Now, AMD is offering a world-class alternative. This shift is shaking up the industry and giving customers more choice, better pricing, and faster innovation. This competition is great for the industry and for AMD. It's driving rapid progress, rewarding innovation, and creating new opportunities for growth. At the helm is Dr. Lee CNBC, a legend in semiconductors. She's led AMD from near obscurity to a tech powerhouse. Her leadership style is a blend of technical brilliance and strategic clarity, inspiring confidence both inside and outside the company. Under her leadership, AMD's vision for AI is clear, and their execution is unmatched. She's built a culture of innovation, resilience, and customer focus that's driving AMD's resurgence. AMD's data center revenue is surging, driven by demand for their Instinct AI accelerators. This growth isn't just a blip, it's a sign of a company hitting its stride at exactly the right moment. They've repeatedly raised their AI chip sales forecasts. This is real revenue, not just hype. Investors are taking notice, and the market is starting to catch up to AMD's potential. The market is still waking up to AMD's potential. Even a modest share of the AI accelerator market could mean massive upside for the stock. As more customers adopt AMD's solutions, the company's financials could see a step change in growth. Beyond data centers, AMD is embedding AI across its product line. From gaming consoles to workstations, their chips are powering smarter, faster, and more capable devices. Their Ryzen processors now feature dedicated AI engines, bringing on-device AI to millions of PCs. This means everyday users will experience faster, more responsive applications and new features powered by AI. As new AI-powered apps emerge, consumers will need hardware that can keep up, and AMD is ready. The company is positioning itself at the heart of the next wave of consumer technology, ensuring its chips are in the devices people rely on most. They're building an ecosystem, not just selling chips. By fostering partnerships with software developers, hardware manufacturers, and cloud providers, AMD is creating a network effect that will drive long-term growth. Their ROCm software stack makes it easier for developers to build AI on AMD hardware. This open-source platform is gaining traction, helping to close the gap with established competitors and making AMD hardware more accessible to innovators everywhere. Great hardware needs great software, and AMD is closing the gap fast. By investing in tools, libraries, and developer support, they're making it easier for the world's brightest minds to choose AMD for their next big project. On valuation, AMD isn't cheap, but compared to its main rival, it's a better risk-reward for long-term AI believers. The company's growth prospects, combined with its expanding market share, make it a compelling option for those betting on the future of AI. You're paying for growth, and AMD is delivering. Their track record of innovation and execution gives investors confidence that this momentum can continue. Their core businesses, CPUs for PCs and servers, remain profitable, providing a stable foundation. This stability allows AMD to take calculated risks and invest aggressively in new technologies. This financial strength lets AMD invest aggressively in AI without overextending. They're able to fund research, expand production, and pursue strategic partnerships, all while maintaining a healthy balance sheet. The competition is fierce, but AMD has proven it can win, first in CPUs, now in AI accelerators. Their ability to adapt and outmaneuver larger rivals is a key part of their success story. Major cloud providers adopting the MI300X is a huge vote of confidence. These partnerships validate AMD's technology and open the door to even greater adoption in the future. These companies don't make billion-dollar decisions lightly. They've tested AMD's hardware and it delivers. Reliability, performance, and scalability are non-negotiable, and AMD is meeting the challenge. Bottom line, AMD is a compelling AI investment, cutting-edge tech, visionary leadership, and massive growth potential. The company is firing on all cylinders and the future looks brighter than ever. They're no longer the underdog. They're a formidable challenger with a clear path to a huge share of a booming market. The narrative has shifted, and AMD is now a name synonymous with innovation and leadership. This isn't a get-rich-quick scheme. It's an investment in the infrastructure of the next tech era. As AI becomes the backbone of modern life, companies like AMD will be the ones powering that transformation. Demand for AI computing is insatiable, and AMD is one of the few companies ready to meet it. Their ability to scale production and innovate quickly gives them a unique advantage. As the AI revolution unfolds, AMD stands to be a key beneficiary. Their technology will be at the heart of everything from cloud computing to edge devices, shaping the digital landscape for years to come. Watch their data center revenue and AI accelerator sales. These are the metrics that matter. As these numbers grow, so does AMD's influence in the tech world. As long as those numbers climb, the thesis holds. The company's growth is grounded in real demand and real innovation. AMD currently boasts a market cap of around $280 billion, with earnings per share sitting at $1.76 and a price-to-earnings ratio just over 98. For 2024, analysts project revenue of nearly $25.8 billion and a net income of $1.64 billion. At today's price of about $172.76 per share, AMD is trading roughly 46.5% below what many consider its fair value of $253.23. There's a lot of positive momentum around AMD, especially when it comes to its positioning in the rapidly growing AI sector. The company's strength in data centers, combined with steady cash flow from its legacy CPUs, gives it a solid foundation as AI inference markets expand significantly in the near future. Just recently, AMD reported impressive second-quarter earnings with revenue climbing 32% year-over-year, hitting $7.7 billion. While the market's reaction was somewhat mixed, this top-line growth is a clear sign of AMD's underlying potential. Investor confidence also showed up on August 7th, when AMD's shares jumped 5.7%, closing at around $172.40. This surge coincided with a broader rally across semiconductor stocks, reflecting renewed optimism despite some headwinds. Strategic partnerships and product innovations are also key to AMD's growth story. For example, the MI300X chip has garnered attention for its memory advantages, and the ongoing development of the ROCm ecosystem is helping AMD maintain competitive strength against other players in AI and data centers. However, not everything is smooth sailing. Despite solid revenue numbers, AMD missed earnings per share expectations, with EPS dropping to 48 cents from 69 cents the previous year. This earnings miss has fueled some mixed feelings among analysts. On top of that, there are concerns the market may have overreacted to worries about delayed shipments to China and how that could affect data center revenue. While some analysts remain bullish, others are urging caution, pointing to AMD's lofty valuation, trading near 100 times earnings, and the possibility of a correction if growth forecasts aren't met. Adding to the uncertainty, guidance for the third quarter is somewhat cautious. AMD's projections exclude expected sales from China, which could pressure revenue numbers and has led some experts to advise waiting for a price dip before jumping in. AMD's recent performance is a mixed bag of strong growth potential weighed against valuation and operational risks. The company's foothold in AI and data centers is promising, but investors should balance excitement with caution, given the high multiples and earnings volatility. Overall, the outlook is cautiously optimistic, hinging on AMD's ability to capitalize on its technology advances and strategic partnerships in a highly competitive market. The ride may be volatile, but the long-term trend is strong. For those with patience and vision, AMD offers a rare opportunity to participate in the next great wave of technological progress. AMD has reinvented itself and is firing on all cylinders. The company's culture of innovation and resilience is driving it to new heights. Their expertise in both CPUs and GPUs gives them a unique edge for the future of computing. This dual strength allows AMD to address a wider range of markets and applications than almost any other company. They're not just a component supplier, they're a solutions provider at the heart of AI. By offering complete platforms, AMD is making it easier for businesses to deploy AI at scale. Don't let the focus on a single competitor distract you from AMD's immense opportunity. The AI market is vast, and there's room for multiple leaders to thrive. The AI market will lift multiple winners, and AMD is positioned as a state-of-the-art battleship. Their technology, partnerships, and vision make them a force to be reckoned with. They've defied expectations before, and they're about to do it again in a very big way. As the world races toward an AI-powered future, AMD is ready to lead the charge. So there you have it, an in-depth look at why AMD stands out as a top contender in the rapidly evolving AI stock race. We've explored the company's strengths, its position in the market, and the opportunities that lie ahead for investors who are ready to seize them. But remember, understanding the market is just the first step. The real difference comes from taking action and making informed decisions based on solid research. Knowledge alone isn't enough. It's what you do with that knowledge that truly counts. Every successful investor knows that staying proactive and adaptable is key. The AI revolution is moving at lightning speed, transforming industries and creating new opportunities every day. If you want to stay ahead of the curve, you need to keep learning, stay curious, and be ready to act when the time is right. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. For those looking for even more, join the Stocks Galore Patreon for exclusive stock tips, in-depth analysis, and real-time trade alerts. You'll be part of a community of like-minded investors, all working to achieve their financial goals. Now I want to hear from you. What other AI stocks are on your radar? Are there any hidden gems you're watching or companies you think are about to break out? Drop your picks and thoughts in the comments below. And if you found this video helpful, don't forget to like, comment, and subscribe for more investing insights, tips, and updates on the latest trends in the market. Thanks for watching, and I'll see you in the next one. Until then, keep learning, keep investing, and stay ahead of the game.